This is the Leadership in Insurance podcast, brought to you by FinPro Search Partners.
Insurance companies are businesses and they need to look for the long term and be sustainable.
We went from 0 to 1 and now it's going from 1 to 100.
Insurance as a concept, as a kind of service, is brilliant. The execution is what we're looking at now.
I think the companies that are going to succeed are the ones that are going to understand and master the art of intent.
When we talk about innovation, we lean too heavily to think about technology and we don't think about creating a culture of innovation.
I think innovation is essentially continuous improvement of existing processes and platforms and product.
Right? It's got to be easy. It's got to be seamless.
Good morning and welcome to the Leadership in Insurance podcast. I'm your host, Alex Bond, and I'm very lucky today to be joined by Zac Townsend, who is CEO of Meanwhile. Zac, good morning. I think, well, is it good morning? What time have you got over there?
It is good morning for me. Yeah. I live in San Francisco, so it's the far side of the world. But
Very good, very good. I wish I was there right now because it's bitterly cold in London at the moment. So that's why I've got about 70 layers on, and I'm in a very dark room because it's kind of approaching evening in the UK. But that's not very interesting for people who are listening. So I'll skip over that. But look, Zac, thank you for joining me. You're someone that I've known a little while now, and I think it's a really interesting conversation to have about Meanwhile business. But yeah, let's start with you introducing yourself, and for anyone that doesn't know who Meanwhile are and what it is you do.
yeah, well, at Meanwhile, we're trying to build really a new global life insurance company. And we believe that there's sort of this once in a lifetime opportunity to use sort of the creation of digital money as a way to reach more people with life insurance. So what that means right now is we have a fully licensed and regulated life insurance company in Bermuda. And what's unique about that company is that it's entirely denominated in Bitcoin. And we can sort of talk about what that means, but it does all its premiums, claims, insurance, regulatory stuff in Bitcoin. But I think for us, that's the sort of first step in a vision that, we see a lot of the world as underinsured. If you live in Argentina or Turkey or Nigeria, or any one of the 57 countries in the world that had inflation rates over 10% in the last year, you don't buy life insurance. You probably don't buy an annuity either. And, these are pretty core ancient financial services. But, why would you buy life insurance in a currency that you're going to live longer than? It just doesn't make sense. So for us, Bitcoin is a sort of tool, store of value. I think in the long term, we'll also extend from that to maybe stable coins, maybe other digital currencies, as we sort of think about really building an institution that can reach as many people as possible, and then also serve them profitably using tech. As I mentioned, that we're in San Francisco, and we're running a fully functioning life insurance company with 8 people. So we have a lot of leverage and very low marginal costs, and so I hope to continue that and serve more people and sort of make life insurance something that is accessible for more people globally.
Amazing. Although I do get slightly nervous when I'm in the position of hiring talent for people that tech-enabled insurers don't need lots of people. So this is bad for my business, Zac. I'm not sure I should be promoting this. No.
I think we need really great people, but yeah, you don't necessarily need a lot of them. But I think what is challenging not challenging for us, but we talk, on the talent side, we talk a lot about we don't need to have every actuary in the world think that Bitcoin or stablecoins are a good idea, but we do need one amazing actuary to think that Bitcoin or stablecoins or other cryptocurrencies is an amazing tool, and it's finding that right person who's a cultural fit, both sort of on the long-term vision and a lot of what's tough about insurtechs or just building an insurance company is you have. I said, we have 8 people. We have 3 engineers, but then everyone else is an expert at something. There's an actuary, there's a chief risk officer, there's a compliance person, there's an accountant. All these people have to talk to each other and exist in the small company, and that's both where all the value is crossing those boundaries, but it's also I think what makes finding people hard is folks who are comfortable working across those boundaries.
Yeah, I would agree. I mean, all the work that we do startups and scale-ups is it's always about the fit, it's about the type of person, it's about culture more than anything else. And like the sort of the skills are quite perfunctory. Like it's like we need this set of skills, and then within that it's like, okay, who's the right person? We were talking internally as a team and saying, we were trying to hire at the moment ourselves, and we talk about the 80-20 rule, and someone just went, well, why can't we just hire the 20? I was like, I wish it was that simple, because we're not getting the value out of the other 80%, but trying to find those people is the magic sauce. You touched on actually there. We touched on kind of like the technical people involved, and I know that we were sort of jumping up and down. There'll be someone going, "How do you make solvency calculations work with crypto?" So I kind of wanted to start with that sort of technical end of it before we get into some of the other stuff.
The truth of the matter is, it's ended up being relatively straightforward. I mean, it's taken years of detailed conversations with the Bermuda Monetary Authority, but the current insurance company just does everything in Bitcoin. So you could imagine, you have this giant solvency and capital spreadsheet, and you enter all these numbers. And there's, your reserving, and there's your interest rate risk, and there's just like thousands of elements in the spreadsheet. But in the end, it's all ratios and numbers, and you can put those numbers in dollars or euros or yen or Swiss francs. And, for us, you could just imagine that there's a little B in the corner for Bitcoin. There's certainly more details than that, like how do you extrapolate out a discount curve in Bitcoin? But those are all, in the end, things we have worked with the regulator on, and then we just don't translate anything back for the insurance balance sheet into dollars. So it's again, premiums are in Bitcoin, claims are in Bitcoin, the reserves are calculated in Bitcoin, all the solvency accounts of Bitcoin. And just again, if I was running a British pound denominated life insurer, I don't ask myself, what's the exchange rate with the dollar every day? The same thing is for us. We did this exactly so that we can avoid, because our promises, our guarantees, and our returns are all in Bitcoin, we get to avoid sort of asking the question every day, like, what is the price or exchange rate with Bitcoin?
Yeah, because I think that's the thing that I missed when you and I first spoke, and it sounds obvious when you kind of explain it like that. But I think that may be the inbuilt fear that people have with something like that's relatively new, it's innovative, and most of the conversation about particularly Bitcoin is all about speculation and fluctuation of that. But the reality is that it doesn't apply when it's all ratioed through. And if you're only ever talking in this Bitcoin, it was something that just kind of passed me by when I first spoke to you. One thing I
think it is really important. It isn't really important to say that, as a store of value, it is possible the price of Bitcoin goes down, and then it has historically sort of always gone up on a long enough time horizon. So there is risk that as the purchasing power of the policy could be less over time. Now, I think our policyholders, we believe that this is a long-term store of value, and that the day-to-day volatility, the month-to-month volatility, actually, the point of life insurance in some ways, and also annuities, is to say okay, I'm planning for hopefully 10, 20, 30, 40 years from now, will Bitcoin be a better store of value for them? But I think it's important to say we're really not in the business of trying to convince people to believe in Bitcoin in the current policies. I think we find people who, they may be what are called crypto whales, they may be maxis, they may be folks who have made every ounce of their wealth in crypto and completely believe. But we also have a bunch of users who are more like family offices, and they want to hold 10 Bitcoin but we don't see it as our mission to convince a person who doesn't believe in Bitcoin to make that jump. Exactly because I think for our current policy to make sense, it really needs to be something that they are not just willing to take on the risk, but understand that this is a volatile asset. If you believe it is going to be a durable, long-term, global decentralized store of value, then actually having a life insurance policy makes a lot of sense.
Yeah, no, I completely agree. I mean, it's even just in simple terms, talking about, who to market to when you're trying to do something innovative. It's you need to push open doors. And, I'm a big believer in that from a kind of sales and business development perspective. It's you find your tribe. It's like trying to convert people people is it's too big a goal. And also kind of, we talk about education on this podcast quite a lot when educating about like net new risks, and often it's talking about net new opportunities within insurance, and sort of working to convince the non-believers is kind of a really big task, and actually not the task of one individual business either.
It's hard enough to explain like what a whole life, or what often in the UK whole of life insurance is. I think we find it at least easier from our perspective to find people who have already bought into Bitcoin, and again for our current product, and then to layer on like why life insurance makes sense, particularly if you're planning to hold or save, or you just believe it's going to be, again, a durable store of value, and it can protect your family and sort of be intergenerational wealth. I think doing the reverse, which is finding someone who has decided to buy whole life and convincing them they should do it in Bitcoin. Not only do I think that would be difficult, I think it would probably be just inappropriate. I think that it's whether or not I think that's the right thing to do doesn't matter. I think for most policyholders, if you've sat down to make a decision about your long-term planning or your retirement or your protection of your family, then it's almost as nonsensical as like they decided to buy a British pounds policy and then like I'm convincing them to buy a dollar policy. And maybe that actually makes sense, but it just is a much deeper barrier. I think to our benefit, it doesn't. There are a lot of other people in the world who are out there talking about Bitcoin, and yes, there's a bunch of like crazy degenerate people that you can believe or not believe, but there's also now like BlackRock and Fidelity saying you should put 1% of your long-term net worth in these assets. And again, I think that coming to that decision about your personal investment portfolio and then reflecting your insurance liabilities or your insurance assets through that makes more sense than we're just not in the business of like getting grandma to buy Bitcoin life insurance. Doesn't make sense.
Yeah. I think it'd be a tough sell to my parents. But I think that's the thing. It's a really important point. Is the kind of getting the institutionals coming in now and making really positive statements about it. It feels right and ready. And because life insurance products are for the individual, they serve different purposes for different people, and therefore, if it's something that you don't need converting and you're invested in already, then it makes absolutely perfect sense. And also, it makes you kind of, from a commercial perspective, it makes your marketing much more targeted and much easier to kind of access the people that are right for you. Why crypto is probably a dumb question, but kind of, I was thinking blockchain in itself, blockchain protocol within insurance would be innovative enough. Crypto kind of is that extra step. Why was that the kind of right move? You might just be like, well, that was just our business idea and thesis, but I kind of
That's a funny way to put it. Look, I think if you take a step back, there's a couple different ways to think about the business, and I sort of talk to insurance people different than crypto people. The macro point maybe is that like there has been this new asset class created, and introducing that asset class to insurance is a really big opportunity. Where it came from was very much driven by my co-founder and I. We're fintech entrepreneurs by background. We had not spent a huge amount of our career in crypto, but had it as an avocation on the side. And then we were sitting down and we wrote a list. We believe there will be a crypto economy, and if you believe that, what are the financial institutions that exist within any like large scale functional economy? And there are payments companies and there are exchanges, and there's insurance companies. In particular, like I think we thought about life insurance companies because like we just had more background in, understanding and thinking about sort of consumer financial services. I think there's another angle to this though that we've really come to, which is we do believe that life insurance is this like critical global financial service. It is very fundamental. It's quite core. Like what happens to my loved ones if I die before I'm supposed to? That's life insurance. What happens to my loved ones if I live longer than I'm supposed to? That's what an annuity is supposed to be about. And then you like layer on all these dynamics about like tax benefits and planning and estates and stuff. So that coming from that side, we sort of realized like, okay, building truly a tech first life insurer where where you like have the carrier and you maybe have the Bermuda reinsurer and you've built all that technology in-house and you really get the nitty-gritty of the tech and the operations down. That's a big opportunity and a very exciting opportunity. But it's an opportunity that is very hard to start because although I think every life insurance company is a data and technology company, if you start that way, you're just turning like a 7% return on equity business into like a 10% return on equity business. And that's not like venture backable. So I think you end up with a lot of insurance plays that like just focus on distribution or focus on tooling for carriers. And the idea of building a carrier from scratch is like, just sounds crazy. So where we've ended up is realizing like, oh, this is an opportunity because what you really need to start a tech first life insurance carrier is a product that no one else has. And that's what like we have distribution partners, like agencies, whatever, IMOs, BGAs, MGAs, all these people, they reach out to us, which is like unheard of in insurance sales, right? And the only reason that is because we've invented a product that no one else has. And that won't be true forever, but that like allows us to like get scale, allows us to like, we've built everything in-house. We've built the application system, the like AML ATF, the actuarial systems, the policy administration, all of that. And that I think the long-term durable advantage of the company is going to be in our tech and operations. But what allowed us to go to market was like 0 to 1 with digital money. And again, I think Bitcoin is the first digital money we're using. There's a lot of headspace there. I think there's like billions of dollars of value to capture using Bitcoin. But then the ultimate vision is to like layer on other digital currencies, including stable coins, and sort of, expand from this core. And on the flip side, then you end up with a giant balance sheet, which I think that we were very conservative with. But, also I think there's in the long term, a lot of like innovative tech first stuff to do on that side too.
Yeah, it's exciting. There's so much you can go at already that's quite clear cut. But first on the Bitcoin. This we had a really interesting conversation before, and it's kind of resonated with a thesis I've had for a while now that MGAs are quite difficult to make work at venture scale. But there was a conjecture you made about that this has kind of led to this kind of new full stack revolution, which kind of touched on just then. But like, can you explain what you meant here? Because I thought it was a really interesting point.
Yeah. I guess what I'd say is I think inside sectors you see these waves of types of innovation, and inside insurance, I feel like the early 2010s was like the first. I mean, there's always been insurtechs, but like people really started to launch. Like in life insurance, be Ladder and Ethos. On P&C, maybe. I mean, there's Lemonade goes across both. I think there's been a lot of like embedded insurance. And I think a lot of those companies, on their merits, they have succeeded in some ways, but none of them have really reached a huge amount of scale. I think one of the problems is it's really hard to innovate fundamentally, right? You have to work with reinsurers, you have to work with carriers, you're really just doing like digital first sales. And like there's a fundamental question about whether digital first sales works in some of these products, to begin with. But it's pretty hard to like innovate the product, to like think about pricing, to change underwriting. When you don't own that full stack. So I really place us in this sort of second or third wave of insurance and technology entrepreneurs who are building more of a full stack. So here in the US, you might see like Kin, which does homeowners insurance. And they have a complicated legal structure where it's like a reciprocal that they manage, but like in the end, they still like own and manage this balance sheet. They have their own cat stack. You have Vouch, which, started with like 4 startups, but like they're a carrier. You have us, there's a whole like actually set of people in Bermuda, like Realm and Names and others. And I think that it's harder. And again, you have to like come up with something that really gets you to like overcome that, like the 7 to 10% ROE thing. But it gives you a lot more flexibility. It's a lot harder, but you can own the operations more. And again, like fundamentally all insurance companies are data and technology companies. It's just that most of them are like 200 years old. So the data and technology they're using is not necessarily up to date. So I think, again, like life insurance is like 4% of global GDP. And insurance generally is, I think, maybe like 8 or 10% of global GDP when you add all like P&C and specialty and stuff. Like these are huge markets that somehow have still like been practically untouched by technology disruption. That will continue, like, so there'll continue to be people who like try to work on it and figure it out.
I love the fact you mentioned Kid and both previous guests on the podcast, so we're in good company. But I think particularly Live has struggled, and you know, we had someone on a Live technology company who come on. So the problem is like people are scared because of the term policies, etc. You know, the sheer numbers involved, the timescales involved makes actually changing technology quite challenging. So actually, it probably gives an opportunity for a new type of life insurance company to come up. But as you rightly say, only if you've got the right product. If you've got a product that someone hasn't. Talking of like big names,
Yeah,
I think
I should just actually say though, like, if you look at the annuity side in the US, right? Obviously, these big PE players have been able to start companies from scratch, right? Like Global Atlantic and KKR, like Blue Owl just bought Kuvar, like obviously Athene. But what's interesting about them is, you know, these are companies spending like hundreds of millions of dollars on technology and operations, and they would be the first to say that like they are not tech and ops companies first, right? They're like asset management companies. So it is certainly possible to build insurance companies from scratch. I think that the question is, and I guess people could disagree, but like I believe there will be that differentiation on both the way products are sold and the cost structure of these companies is possible. But yeah, you have to figure out the hard way, like how do you actually get into these markets? And again, for us, it's been in some ways quite innocent, right? Like we wanted to start a crypto life insurance company. I think it's been running that company for 3 years that we realized like, oh, this is an opportunity to build a life insurance company with crypto as the.
I'm going to jump ahead a couple of questions actually, because that kind of touches on it. So we were talking about the importance of ignorance in entrepreneurship. How beneficial is that to sort of go into, you know, not blindly, but is it beneficial to kind of in some way be blind to some of the challenges that you might see, particularly you're taking on something as big as starting a life insurance company from scratch?
Yeah, it's an interesting framing because on the one hand, you know, we have people on the team, obviously, who know a ton about life insurance. I do think that like a beginner's in mind or whatever is very useful when approaching new problems. On the other hand, if this company doesn't work out, I will definitely be able to start a life insurance company and know a lot more this time.
Yeah.
But I do think that there's a mindset that is important. Like, you know, sometimes like I'm talking to our head of insurance who has over 20 years as a life actuary and like led life insurance businesses. You know, I just have to like keep asking like, why is that way? And I think the good thing about that is things aren't arbitrary. There usually is like a 5 whys reason to like why things are designed the way they are. But by having that conversation, you then get to, you know, re-examine trade-offs or options and stuff like that. I think it is a critical, like the mix of not knowing how hard something is going to be so that you jump in and do it. And then also just that deep curiosity to keep driving toward why things are the way they are. And one of the reasons that starting a company from scratch lets you do that is we do have to like literally every single thing we have to like literally write code to do it. You know, there's no existing code or operations. So that gives you the opportunity to really ask like what's necessary. And those examples can be quite small, right? Like we have a policyholder right now, you know, bought the policy. The policyholder is the owner. So the insured and the owner are the same, you know, they want to switch it. So like the insured and the owner is different. Very simple like operation. So what do we do? Like, well, actually we went and collected a bunch of forms that other insurance companies use about like to transfer ownership. And then you're like, why do I have like these 50 questions? And like, how do you really work that out? And that's just a super simple example. You know, by being able to have a reset button on how something's done, you can really examine it and try to understand it and then build an experience for the user that's amazing. And like, look, are we going to sell more policies because we get that experience right? No, but I think it's a culture of approaching every problem that way.
Yeah, I think that's a very tech-first way of approaching things. Definitely something that, you know, is more prominent in the tech-enabled business or tech businesses that we speak to. that's just a culture thing that I think sometimes doesn't resonate in the more kind of insurance, led businesses or more traditional businesses. I'm conscious of time, and I really wanted to ask you this one. Is there anything you would fundamentally change about the way that you set the business up? Now you're 3 years into the journey, now you know more, ignoring how that might have impacted your ability to raise money, because I suspect you go, I wouldn't have been able to raise the money on it.
Yeah, I don't know, actually. It is crazy to me that we have learned so much, and we put it another way, we knew so little when my co-founder and I started the company. But when I go back and read the original memo that I raised the seed funding on, we had essentially done what we said we were going to do, which isn't particularly typical. I think that I might have hired a little differently at some points. I might have emphasized like building different things in different orders. I know a lot more about what matters in Solvency II and what doesn't matter in Solvency II. So there are a lot of like tactical things I would probably do differently. If I knew everything I knew now, it took us about a year to get licensed in Bermuda, and then it took us about another year to operationalize. I could probably have made that, like, instead of 2 years, like something like 18 months, because I just know a lot more about it. But like on core fundamental things, I don't know. I don't think so. Like Bermuda, there are other jurisdictions that we could have moved faster in, but we wanted to work with a jurisdiction that's really very well respected and is tough. So like we're very happy with that pick. When we started the business, it was like true like crypto froth, craziness, FTX, like lots of different stuff. And I think that we made a very deliberate choice that only cryptocurrency that we felt comfortable saying to our users, we think this will be here in 50 years was Bitcoin. And I think that choice is also borne out. Anyway, so I'm patting myself on the back. Yeah, we did, which is really just a way to say we got pretty lucky and like made some good choices in the beginning.
Hey, the pat on the back's important. Entrepreneurs, no one else is going to do it for you. I did want to talk about your investors, because you've got an incredible like set of angels and various kind of early stage investors. Like, and anyone can check them out. They're all thanked on the website, but it's a hell of a list. I've not seen a list like that before. It's a bit of a who's who. How have they influenced your trajectory, do you think? And how important are those kind of? There are a lot of marquee names there.
Yeah, I mean, look, one thing we've done is we really tried to have a set of like tech people, so like Sam Altman and Lockie Groom, like co-led our first seed, and then we wanted to have like some crypto people who, you might not know these folks, but like great angels from that world, like Six Man Ventures and Stillmark and Mark Bacava and Zach Abrams and folks like that. And then we wanted to have like some real hardcore insurance people. So actually, the CEOs of Kin and Vouch are both angel investors, Hyatt Openly, but also like Hudson Structured Capital Management, Northwestern Mutual, and others who really know insurance, right? And we wanted to like get that mix together. So they're each important and useful in different ways, and I think they're animated and excited about different parts of the vision. I think that particularly when you look at the like Sam Altman's and Parker Conrad, the CEO, overplaying, and those folks. I think the thing that excites them, Sam, as I think we can all appreciate, he loves like big ideas. And I think from the very beginning, our ambition was to build a like defining global life insurer. And that on the one hand is really important for users and can really change the way that people live and plan their lives. And on the other hand, having that sort of institution in the world could make long range infrastructure investments in lots of different things that he cares about. And so I think from the very first meeting, like I said that my goal was to have a billion policyholders, which is like 800 times more than any other life insurer. And that the combination of digital money to reach policyholders and like AI automation to serve them profitably, like made this like a now thing. We'll see if that all pans out, but I think that that's sort of what different people have brought to the table is like our business is very multifaceted and different investors have different perspectives, right? So the insurance folks help us with insurance stuff and the tech folks, I think, helps us with tech stuff, and like different people bring different aspects of raising the bar and helping us set our sights high.
Yeah, I think the big ideas thing is what excites me about your business, and Yeah, I'm really conscious of time, but I think we could. There's so many variations of this podcast we could have done, and I think we talked about it at the time. It's like, what's the audience? Crypto versus insurance versus entrepreneurship, and I think we've managed to touch on a sort of decent splash of most of it. So, yeah, Zach, thank you so much for being a guest on the podcast. It's we talk about innovation all the time, but it's very rare that we talk to a business that's like genuinely net new product, net new way of doing it. So, yeah. It's a
for better or worse, we're the only ones doing what we're doing. So maybe half your listeners will think that's absolutely crazy, and half of them will think it's absolutely innovative. But like in some ways, that's the point. So thanks for having me. I really appreciate it.
No, not at all. I say that about my business all the time. Is that there's no other search firm that just does insurtech. Either business is a terrible business model or a really good idea, and we'll see where it goes. But yeah, thanks, Zach. Really appreciate your time.
All right, cheers.